Okay, guys, good day. Welcome to my channel. My name is Mr. Skolo from Wisdom Tutoring Academy. We'll be doing question 1 on the Eastern Cape project. I will be tackling this question, the Eastern Cape 310 Accounting Chem 2 project. For me, I know, guys, maybe this may not be the project that you have on your province or on your school, but what I want you guys to take note of is the principle or the content, the content in this project, because I believe the content is the same in each province. The question may differ, but the content is the same. What the examiner are examining you guys on are the same. The question may differ, but the content is the same. And the same content will be the same content that you will write in June. Remember, we are preparing for the exam. Without wasting time, let me get straight to the cow. Okay, now the marks of this project, 100 marks. Instruction: the project must be done under control condition. Okay, which means you must do this in class under supervision of your teacher. Answer all questions in the specific answer book. You are provided with the answer book. Okay, now let's leave that part. Let's go to question 1. Question 1, they are saying now the bookkeeping, recording cash and trade transaction and posting to the ledger account. So this is telling us what we will be doing, we'll be dealing with. Now we are dealing with Balfi stores. They are telling us in Balfi store, bailiff or bailiff, not Balfi, sorry, bailiff. Bailiff stores sells kitchen appliances and bailiff store sells kitchen appliances and homeware products. The business uses a profit markup of 50% on cost on all goods sold. Kwatwa B. Jackson, the bookkeeper of bailiff stores, started preparing the journal for April 2023. She, however, was not able to complete the process. Hence, all the journals provided are partially completed. Okay, so that means we are provided with partially completed journals. So we need to complete those journals, or we are provided with partially completed books. So we are going to do 1.1 in this section. We are only going to do 58 marks. Then on the next session, we are going to do 1.2 and 1.3. Okay, let's get back to the cow, straight to it. Complete the partial completed journals provided by taking into account the list of transaction and the source document provided. Ensure that all entries are in date order. Close off the journals at the end of the month. Okay, so we have to close off all the journals at the end of the month. Okay, let's go and check the information given to us in the journals, incomplete journals. So this is the information we are going to use, the information. Okay, by journaling, you can see in your journals, we are provided, that means the bookkeeper managed to record up to the 11 in the CRJ and up to the 12 in the CPJ. Okay, so what we are going to do answering this question, we are going to go straight to our transaction for the what? For the journals. Remember the balance, we are going to use them on the T account when we are preparing the T account, when we are preparing the ledgers. Okay, then now let's start with the books, with the journals, journal entries. So for each journal entries, remember we check the transactions, we use the transaction. Okay, let's start on the 17. What happened? On the 17, transaction not recorded by B. Jackson in the journal for April. So all these transactions were not recorded. So we are told here, received an electronic payment. Received. Who's receiving? Us as a business, we are receiving an electronic payment, but we are not paying, we are receiving. So the payment, that means the payment is from someone else, from Z Tunes, in full settlement of her account of what? Of 5,600 less 5% discount. So now this tells you, because we are receiving cash, but Tunes, Z Tunes means Z Tunes paid electronically, but the fact that we are receiving cash, this goes straight to the CRJ. So without wasting time, let's take it to the CRJ. Yeah? And remember, when we are taking it to the CRJ, we have to account also for the discount. Yeah? Because the amount that we received is not stated, but we are told that Miss Z Tunzi or Mrs. Z Tunzi was settling her account, which was 5,600, but less. How much? That means we have granted her it discount allowed. So we have to less the 5% discount. In other words, in order for us to be able to less the 5%, there are two options. Is either we are going to first multiply the 5, we look for the 5%. We are going to take 5,600 and multiply with 5%. That's option number one. Most students, I think, will go for it. Option number one, you multiply, you try to find out what is the 5%, or how much is the 5% discount that we have granted this customer if we are giving the customer, how much discount have we given the customer? If the customer, we are giving the customer 5%. So we are going to take the 5,600 rands, multiply by 5%. That means, the discount is 280 rands. I hope you guys are following. It's 280 rands. Okay. So now this means if the discount is 200, so if the discount is 200, if the discount is 280 rand, that means we will be paying, we have received, how much did we receive? Sorry, I was disturbed a little bit. Okay, if now the discount, we have found that the discount is 280. So this means we have received how much? We didn't receive the whole amount because we have to subtract the discount. So we are going to take 5,600 rands and subtract the discount, which is 280 rands, which will leave us with what? So when you are subtracting 280 rands from that amount, what are you will be getting there? So you minus, you will be getting what? That means the business have received 5,320. 5,320. Please don't mind my writing. Okay. Let me rub this a little bit here. Okay, so we are saying now the business will receive, for us as a business, we have received how much? 5,320 rand from that payment. Okay? So this is one way of calculating the amount that you are going to receive. So the amount that we have received in the bank, that will be on our bank account from this data, will be 5,320. So is the amount that we are going to take to our CRJ. Then I said, remember, this is option one on how to calculate. Option two, someone will say, okay, Mener, since this person was paying for 5,600, was settling her debt of 5,600. But since we gave her a 5% discount, that means he will no longer pay us the 100% she owed us. But she will now pay, we will less the 5%. That means she will pay us how much? How much percent? You will pay us 95%. So now the money that the person will be paying is equivalent to 95%. So we will take the 5,600 and multiply with 95%, which will give us exactly 5,320. So now we know the amount that we are going to receive, but we don't know the amount that we are going to give her as a discount, the discount allowed. So the only way to calculate, one of the way to calculate discount allowed, to take the original amount to multiply it by 5%. So I don't want to complicate it. So you calculate the discount allowed. But for the amount that you will receive as a business, that we will receive as a business, you just multiply by 95%. Okay, so both of these methods are complementing each other. Okay, so now we are okay. Now we are going to take, okay, the receipt, the date is on the 17th. Now the receipt EF, this was an EFT payment. So this is an EFT transaction. Okay, on the 17th, from who? From UZ Tunzi. From Z Tunzi. How much did we receive from Z Tunzi? We received 5,320. Okay, then this is the analysis of receipt. And also how much did went in our bank? It's 5,320. Okay, then is this amount was for sales? No, we didn't receive this amount because we were selling. Now Tunzi was paying for something that she had previously bought from us. So this means now Tunzi was paying her debt. So it goes straight to the debtors control. How much did we receive? We received 5,320 because we gave her a discount. Was any discount that we granted her in order, because remember the debtors control, it won't decrease only by the amount that we receive. So we need to settle all her debt. So we will need to include as well the discount that we granted her, the discount that was allowed to her, which was 280. The reason he paid us with 320. Okay, so you are done with that transaction on the 17th. We move on to the transaction on the 20th. What happened on the 20th? On the 20th, traded sales to Z Tunzi. Sales, we are selling, but we are selling on traded. Mark that. Yes, we are selling, but we are selling on traded. Okay, so if we are selling on traded, which journal are we supposed to record this on? So we are supposed to record it on debtors journal, because the person that we are selling on traded will automatically become our debtor. So this will be the debtors journal. We are going to record this transaction on the debtors journal. So without wasting time, let's take it straight to the debtors journal. So we sold. What are we selling first? We are selling the sales. What are we selling? We are selling a trading stock, obviously. So we are selling a trading stock. So it traded sales that we have sold to Z Tunzi, another trading stock of costing us 4,000 with a selling price of 4,155 rands. So we go straight to the debtors journal to record this. On which date? On the 20th. On the 20th, we record the debtors. So there's no, we are not given the invoice number then. So we'll just add on top of these invoices. So it's going to be invoice number 34. Then from who? From Z Tunzi. Okay, so if it's from Z to Z, then we take it, how much were the sales? The sales figure was 4,100. Okay, let me fix my writing. Sorry about that. The sales figure was 4,100 and what? And 55. 155. Then what about the cost of sales? So we have to calculate the cost of sales. Now you have to remember, student, when you are calculating the cost of sales, you have the cost price of the product. The cost of sale is the cost price. Ne? Okay, so the cost price is always the original price. Is equivalent to what? 200% in terms of a rate. Ne? In terms of a percentage or a rate is 100%, the original price. Now, when we determine the selling price, ne? So remember the cost price, whenever we are buying a product, we are buying it to sell it. So as a business, so the sell, whenever we are buying a trading stock, in fact, ne? Not a product. So then what happens again with the cost price? So we determine the selling price. For us to determine the selling price, we want to receive an amount that is greater than the cost price. That means it will be, we'll say it's the 100%, we want to receive the 100% back plus the profit, which we call the markup, plus the markup profit. So now in terms of a percentage, that means the selling price will be 100 plus the markup. Ne? Always mark that. So now if we want the cost of sales, we want the cost price. Are we together? So we will use, we want the cost price. We want the cost price, ne? Having what is sales. So it's either you have sales, you are looking for a cost, or you are having a cost price, you are looking for sales. So if we are looking for a cost price, we are going to use the selling price that we have, and we multiply. Always when you use the ratios, you always multiply with what you want over what you have. I hope it makes sure. So how do we do this manual? Okay, so now you're going to take your selling price, multiply with what you want, because remember, we are looking for the cost price. Eh? So we are going to take the selling price, multiply what we want in terms of the rate. We want 100 over what? Over 100 plus the markup. So over 100 plus the markup. So let's put this in practical. Ne? Never mind the percentage. Maybe you are asking yourself, but say you said percentage, the word percentage, you can just say 100 and 100 plus the markup. It's fine when you are using the ratio, the rate. Okay, let's put this in practice. That means in order for us to use this, we are looking for what? For the cost of sales, having what? We're looking for the cost of sales given the selling price. Whilst the selling price is 4,155 rands. So we are going to multiply this selling price with the rate for a cost, which is 100. All over 100 plus a markup. The markup here was given to us, if you remember. We were told that the business is using, I even underlined it. The business, we were told the business is using 50% on cost. The markup is 50%. So the M is 50. So we are going to take 100 because remember, we are saying it's what we want over what we have. What we have is the selling price. So we are looking for 100 having what we have. What we have is the selling price, and the rate for the selling price is 100 plus the markup. So we are going to take the 100 plus the markup. Our current markup that we are using is 50. So it's going to be 100 plus 50, which is going to give us 150. I hope it makes sure with people. Then you punch your calculator. So we go to our calculator. So we are going to take the 4,155 rands and multiply it with 100 over 150, which will give us 2,770. 2,770 rand. So these are the cost of sales. This is the amount that we are going to put here, 2,770. I hope it's clear on your side. Okay, then we move on to the next transaction. Okay, remember my transaction, because I didn't check all the transactions. Ne? Remember, there are also these transactions that are down here. Ne? Please, when you are doing it, because I remember now there are other transactions that are down here. Maybe in order for us to use all the transaction, let's just, before we record the transaction, let's first indicate which transaction goes where, e.g., so that we can take into consideration also the dates. Ne? Okay, so on 21 February, the business returned damaged stock valued at 900 from the purchased on 14 April to creditor KPL Traders, who is returning. The business is returning the stock to the what? To the supplier. So if the business is the one that is returning the stock, so this means this will be a creditor's allowance together, because we are going to be we're going to be allowed to, we are going to get an allowance from our creditors. Are we together? So a creditors allowance. Ne? So this means this will decrease our credit. That's what it says. Ne? The credit for the business now will be decreased because we have returned the stock that we have previously bought. Ne? Purchase on first on credit, on our credit. That means we have bought them on credit. So this one is going to be creditors allowance general. Okay. For the sake of the date, so I won't take it straight now. Then I move on to the 23. On the 23, we are told now the cash sales of merchandise is per cash register. Roll 23,400. Traded sales to date. Okay, the cash sale of merchandise as per cash register roll. So that means if the cash sales, the merchandise, we take use of the cash register roll, that's CRJ. Yeah? It's going straight to the CRJ. Traded sales to a debtor, these ones are going straight to the DJ. Yeah? Then, because the traded sales to the debtor L, Lawrence for 1,260. So we know that one. On the 25, what is going to happen? T Songs returns good that was not according to his order. Issued document for 1,500 being the value of the goods returned. So now Uti Songs returns the good to us, the business. We are not the ones now that are returning the goods to the supplier, but the goods is now returned to us, the business. So what is going to happen? We are going to record this on the data, because this one, it's a data. Uti Songs. So it's a data. So we are going to record it on the data's journal. No, sorry, not on the data's journal, sorry. On the data's allowance journal. I made a mistake. Huh? Data's allowance journal. I hope we are together. Né? According to his order, issued a document for 1,000 being the value of the goods. So he was returning goods to us. And remember, Uti Songs is one of our debtors. Received a traded invoice for the following purchases. Now, who's receiving an invoice? Receive a traded invoice. We are the ones that are receiving now the invoice, which means we are the ones that are buying on traded, because we are told it's purchases. So if you are buying, that means this will go on the CJ. This will be the creditors journal. Okay, they have separated them because there are two different products that we bought. We have bought merchandise, we have bought also stationery, but when we were buying the merchandise, we were subjected to 20% discount. Note that when we are going to do that with that machine. Or I think this will take a lot of our time. Eh? So I will just record them. Never mind the dates, guys, for now. Eh? But when you are doing it on your own, please organize your date must be in order. Eh? But for me, I will just freestyle because I just want you guys to catch the procedure and to save time because we of the load shedding. So we need to save time. Okay, so let's go to the question. Now, okay, let's start from here, from this one on the 21st, because we didn't record this one. We said it's going straight to the CA, the creditors, allowance, general, because we are the ones that are returning stock. We were returning stock to our supplier. Ne? So how much the stock for how much for 900 rands? So to which supplier? KPL traders. So we are going to check the creditors allowance journals. Do we have any creditors allowance journals? We have debtors allowance. We have the creditors journal. This is the what? The debtors, the creditors allowance journals. So let's check the date first. On the 21st, né? And the amount is 900 rands. So the traded allowance journal, we are going to the 21st. So we are not given the traded allowance journal, so we are going to write UDN3 as well, because there's no document number, huh? We're not given the doc number. Then we go, it's from, we are returning the stock to who? Remember we said we were returning the stock to someone, KP something. Let me double check whether we're returning the stock to who? To whom? Okay. The stock was being to KPL traders. We're returning the stock to KP KPL traders. Sorry, I don't know what I'm writing here. So KPL traders. Okay, so for how much the creditors control, so this will affect the creditors control. Ne? So the trade that we are returning is for how much? It's for 900 rands. Ne? So what are we returning exactly? Are we returning trading stock? Are we returning stationery? Or are we returning something else? So we are returning damaged stock. So we are returning a trading stock. So this is going to go straight to the trading account. Okay, then we are done with that one. We move on to the next one. The next one was the next transaction take place on the 23rd. So on the 23rd, we had that we had the CRJ, the cash sales of merchandise as per cash register roll, CRR. Ne? So the cash register roll, which is 23,400. Okay, we received 23,400 on which date? On the 23rd. So we are going to record it there because it's on the 23. So we are going to record it here on the 23. So the document or the source document that we use is the cash register roll. Ne? So it's going to be CRT. Maybe we can write 3 since there's 2 already there. So it's on the 23rd. How much is it? You're sorry? It's from, oh, sorry. So what are we going to record here? Since it's from the cash register roll, we are going to write cash. Because there's a lot of people, but they were all paying in cash. So analysis of receipt, how much did we receive? It's 23,000. 23,400 rands. Okay, how much went into the bank? Because it's cash amount, so the same amount went straight to the bank, 23,400 rands. Okay, how much was for sales? This sales was the 23,000 again, because while eBay cash, it was 23,400 rands. 23,400 rands. So what we are going to do, we are going to take the 23,400 rands and multiply it. Remember, we want a cost of sales. Whenever there's a sales, there's the cost of sales. So you need to calculate the cost of sales. Remember, we said the cost of sales will be 100 over 100 plus the markup. Now it's going to be 150, which will give us what? Then you punch your calculator. So it's 23,400 rands multiplied by 100 over 150 rands. 150. So we are getting what? 15,400, 600. 15,600 rands. 15,600 rand is now the cost of sales. So we are done. It's not going to the salary account. It's not for debtors, but these were people that were paying cash. No one that was paying off head debt or something, or portion of a debt. Okay, we move on now to the next transaction. When the next transaction took place on which date? After the donation on the 25th. Yeah? Now we are told that on the same day, yeah? On the 23rd, we had another transaction, traded sales. We had traded sales on that same day worth 1,260. And we were selling those on traded to what? To L. Lowry. So we are going to go to the debtors journal and record the date first, on the same date, the date was on the 23rd. So we are saying now on the 23rd, so we sold on traded. So we are going to say this one will be invoice number 35. Okay, we were selling to who on traded? We were selling to L. Lauren. We're selling to L. Lauren. We're selling to L. Lauren. Lowry, not Lauren, sorry. Lowry. So I have to double check this name because it's Lowry. Okay, so how much was it? We sold to X Lowry for 1,260. The selling amount was 1,260 rand. 1,000. So let me wrap this down. 1,260 rand. So we have to also calculate the cost of sales on that amount. So we're going to take the 1,260 and multiply it by 100 out of 150. Since the markup is 50%, it's 100 plus the markup, our denominator. So it's 1,260 multiplied by 100 over 150. which is going to give us 840. 840 will be our cost of sales. Then we move on. We are done with this one. We are done. We are done. We are done. So we move on to the 25th. On the 25th, Kutatis song are 10 goods that were not according to his order. Issued document for 1,500, being the value of the goods returned. So this was the person that was returning stock to us. So we are going to record it on which account? On the debtors allowance journal. I hope it's make sure. So on the debtors allowance journal, on which date? On the 25th, I believe so. We are not given any number, so it's going to be number 14. This is 25, sorry, by the way. Then who's returning the stock? T-songs. T-songs is the person returning the stock or the customer returning the stock. So we are going to write T-songs. The stock that T-song is returning previously bought it from us for 1,500 rands on trade, isn't it? Because T-songs is one of our debtors. Then we have to calculate as well the cost of sales for T-song, which we are going to take 1,500 and use the markup multiplied by 200 over 150, since the markup is 150. So how much is it? So it's going to be 1,500 multiplied by 100 over 150, which is equal to 1,000 rands. So that means the cost of sales for T-song was 1,000 rands. Okay. So these transactions are still easy. Okay, then we move on to transaction on the 29. On the 29, what happened? We received a credit invoice for the following purchases. Credit invoice, we are the ones that are receiving for the purchases. So we are buying on credit. It goes to direct to the creditors journal. Okay, how much will we take to our creditors journal? That's the question. Okay, so the creditors journal will receive an invoice for following from who? From whom? From Upila's traders. We bought from Upila's on which date first? On the 29th. We bought from Upila's traders. Upila's traders, how does Pillars spell? Oh, it's P-I-L-L. So it's Pillars. Where is it? It's Pillars or Pillars? I don't, okay, I'm lost. It's Pillars Traders. Pillars Traders. Let me say PT. Yeah? You will know it's Pillars Traders. Okay. So what will happen here? We bought two different types of material from Pillars Traders or of stock of products. So we bought from Pillars Traders a merchandise worth 8,560, but we were granted a discount. So that means we are not owing Pillars Traders 8,560 for those products, but instead we are going to get rid of that discount, or we are going to calculate the discount 8,560 multiplied by what? You can look for 20% of that amount so that you will know the value of the discount that was granted to us. So it's 8,560 minus 20%. So therefore 20% will be, sorry, not minus, plus, must it multiply by 20%? I made a mistake. Multiply by 20% shift the percentage, which will give us 1,712. 1,712. So this is the discount that we will receive from Pillars Traders. Yeah? Okay, so if it's 1,712, that means we won't pay the 20% from the 8,560 that we bought. So we are going to owe Pillars how much. We are not owing for the 20%. So the 20% is a discount. That means we are owing Pillars 80%. I hope it makes sure for people. So if we are owing Pillars 80%, so we can use the same calculation to calculate for the 80% that we owe Pillars. So it's going to be 6,848, 6,848 rand. So this is the amount that we are owing Pillars. So this is amount that is going to go straight to our creditors control. We will record as owing. But since now there are two figures on the same date and on the same company, so okay, we can write them individually. We can write the 6,800 rands and 48